On today's video, we'll be covering on how to VIX 75 on your smartphone and also VIX 100. Yes, so let's get in with VIX 75 first. What you simply do is you simply highlight your supply and demand areas so that you can take advantage of them, because without them you can't structure price action. So someone might ask how I drew this trend lines and why. I simply focus on the first two. Like for instance, I focused on this case, I focused on the first low and the second low. That's a valid sign that I could draw a trend line here. That's why it's here. Same applies to here. First touch, second touch of the trend line, then I drew a first high, second high, then I drew the trend line. Here it continues. So what I simply do when I analyze, I start from the higher time frame to apply the multi time frame analysis. It's called the top down analysis. This is our 4-hour chart that was daily. This is our 4-hour chart. Focus mostly on current, but we also have to look left. You also have to look left and see whether there are areas which might impact price. Same as this previous high here. You see how it impacts the future. Same as the previous high over there. Okay, price didn't test that area, but it's fine. Let's focus more on current. First low, second low here. Then we have a valid trend line. So what we get is that this trend line was broken through. Was broken. So it simply means this trend line is no longer valid because price broke below the trend line, then went back for a retest. And remember, the green area is an area of supply and demand based on this previous high. So it's an area of value. So what you simply go to lower time frames. This is our 1 hour time frame. You check the structure. Okay, first low, second low, draw a trend line. You see here we have a structure here, a corrective movement. We have a corrective movement here. This is our corrective movement. Yeah, it's not well drawn, but you have to understand that it has to be above this price here. I've left it like this just to save time. So what you have here is a corrective movement after a trend line breakout. So that simply means you already have a scenario that, okay, my uptrend has been invalid, is now invalid due to the fact that this upward trend line was broken below. So that shows that price is no longer making continuous higher highs and higher lows, higher highs and higher lows. As you can see, this was our higher high, our higher low. It didn't make a higher high. You get my point? So instead of making a higher low, it didn't make a higher low. It made a lower low, which is lower than the previous low. Then a retest to the trend line. Okay, we have a higher high, higher low, higher high, higher low into resistance. But what happens is that price ends up respecting this area over here. Due to it was tested for the first time, third. So this third touch, you also have to take advantage of it. Due to it shows us that area has power. As you can see there, we had a double top there. So since when you have a double top, you have two confirmations. A third test on current supply and demand area and a double top. So we have 2 confirmations so far, and once we go to higher time frame on the double top, we have a candlestick confirmation there. Let me go to the 1 hour. So as you can see, you could have entered there as first, you check, and your second entry on the breakout of this corrective movement, this channel over here, our channel over here. So yeah, so if you missed out on the on this first entry, you know, okay, you wait for the breakout of the corrective movement and pull back to it. Here's the clean one, so you know you enter, you eat to the downside, So for take profit areas, you simply look at previous lows and previous highs. I would advise you to focus more on recent ones. So our first one is here. This is our first, due to this previous high over here. So it was broken below. So once you go to lower time frames, you can see that you have a corrective movement there. So according to the strategy, you could have took your profits obviously as due to a previous low, but you could have got another chance to enter again as we have a corrective movement there. This is our bearish flag. Yes, this is our bearish flag. So what you simply do is that you just wait for the third touch on the upper trend line. If it's not there, you just wait for a breakout below, then a retest to the trend line, then you in. Place your cells over here. You have a third opportunity. Here. So when you enter there, you simply do the very same thing you did on the first one. You look at the most recent previous lows for your take profits. So here's our most recent low here. That's our second take profit area, and there's a trend line there. The higher time frame trend line, this one. So since we really draw it on the higher time frame, it has more impact on lower time frame trend lines. So you simply know that, okay, I'm gonna take my profits approximately here, due to the fact that that area has a trend line going through there, and a powerful one through on the 1 hour, daily time frame. Yes, that's how you simply scalp VIX 75, guys. That's how you simply trade VIX 75 on your smartphone. So what you do is that, since you'll be running on profits now, all you do is that from the entry took here, you just place your stop loss above here just to protect your profits. Since we had a corrective movement, you check corrective movement. So after a corrective movement, we're expecting an impulsive movement, which we can benefit on again. Let's quickly yes, this VIX 100. Yes, so like as I said before, we start with the higher time frames, guys. You have to learn to apply this multi-time frame analysis strategy, because it gives you that bigger picture of price action, and again the understanding of the main trends. Yes, and it makes it easier for you to spot the major support and resistance areas, and it makes you understand the main trend, the main bias. And since really you have to understand the main bias, it simply means, when you understand the main bias, let me put it this way, when you understand the main bias, you know that, okay, if I understand the main bias, I can take advantage of lower time frame trends. Yes, lower time frame trends. So this is our VIX 100, guys. So we're gonna focus more on current price action. As we can see here, we had a corrective movement, then we went to the downside. This is our daily time frame, guys. This is our daily time frame. So we're just gonna focus on this this corrective movement over here. Just focus on this corrective movement over here. Let me make a line chart. Where's the line chart? Yes. Okay, it's fine. Back to the we have a corrective movement here. It's some sort of an upward channel, or you might say an ascending channel, which shows that the buyers are no longer in power. What I mean by that is that take a look at this previous trend here, this uptrend. You see how impulsive it is. It's not like this one having too many candlesticks, which are not clear whether this is an uptrend or what. But what you have to understand is that, okay, since I have a corrective movement, after a corrective movement I expect an impulsive movement. So which side are you gonna expect the impulsive movement to go towards to? That's the question you have to ask yourself. So in this case we have a candlestick pattern here. I just wanted to show you this corrective movement so that you can understand. This is our corrective movement. On this corrective movement we have a pattern. So it goes back to, okay, I have a corrective movement. Which side am I expecting the corrective movement to go to? I mean the impulsive movement to go to. You get my point? Yes. So we have a head and shoulder here. We have a head and shoulder. So let me quickly do like this. This trend line is giving me trouble now. I'll explain afterwards the pattern. I'll explain the pattern more clearly. Okay guys, as I've said, we have a corrective movement here, as I've said at the beginning. And this corrective movement, okay, you go check, okay, in this corrective movement, which patterns do I have? Okay guys, back to the structure. We have a corrective movement here. Yes. So in this corrective movement here, we have the first shoulder, the head, then the second shoulder. Then you know, okay, I have a head and shoulder. So what does a head and shoulder mean? Someone might ask, what does a head and shoulder mean? It simply means that price is failing to make continuous higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, as compared to this movement here. We have let me show you. We have a low here, we have a higher high, we have a higher low, a higher high, we have a higher low, we have a higher high. So price is failing to make continuous higher highs and low. As we can see here, we made a higher high, a higher low, a higher high, a higher low, a higher high, a higher low. Couldn't make a higher high. So that's my point. That's what head and shoulders mean, and that's what they show. And they show what price is trying to tell you. That's how you trade, guys. Price tells you, then you react. You don't just guess and take orders here. So guys, since we have identified our head and shoulder, we go lower to our 4-hour time frame. So in our 4-hour time frame, we go back to that corrective movement structure. Go back to that corrective movement structure. Yes, go back to that corrective movement structure. As you can see, this is our head, as we've stated on the daily time frame. Then this is our shoulder. So what happened is that price broke below, then formed our second shoulder as a retracement. So on that shoulder, on that right shoulder, the second shoulder, we had a double top there, which is a pattern within pattern. This is our 1-hour time frame. As you can see, the first top, second top. Then you know, okay, my analysis, my forecast is now valid that we are going to the downside. You place your, let me go to 15-minute time frame quickly. you place your first order here, your second order on the pullback to the trend line. When we have our second double top as here when we go to higher time frame. So this is our double top, another confirmation for entries. So you simply enter there, then you look for exit points. You go look for previous lows, the most recent previous lows. So the pullback to the trend line, and again there's a pullback here, a retracement, or others say it's a pullback. You enter again, it's an opportunity to enter. And when you go to lower time frames, there are more retracements there for you to take advantage of. So here's our most recent low. This is our first take profit area. This is our second take profit area. Actually, our second take profit area is here. Then this is our third one. Okay, back to structure. Let's go to 15-minute time frame and show you the retracements I'm talking about. This is our first retracement. This is our second retracement. Another retracement here. There are so many retracements, guys, to take advantage of, especially when you go to 15-minute time frame. There's more. You can scalp there. You can scalp. As you can see, the most recent ones is this one after this flag over here. This one is not as clean as theory, but when you understand price action, it's easier for you to take advantage of them. This is our corrective movement here. So yes, guys, you take advantage of it the very same way as the previous one. You wait for the breakout, a pullback to the trend line, then you in again. Another corrective movement, which is a flag, you in again. Another corrective move, you in again. Guys, it's very easy. You don't have to complicate the situation. So yeah, guys, this is how I trade VIX 100 and VIX 75 on my smartphone, guys. This is your boy KK Wesinyan signing out.